Hello, welcome to Forex School Uganda. I am Godfrey. Today, I want us to do a quick recap of the gold opportunities that we had based on the analysis that we did on the 16th of August 2024. We had said we expected gold to go to the upside to hit certain levels, and so we want to do a recap of such trades that were available for us to take and to see how they actually played out. Now, I'm going to put a link to the video where we did the previous analysis in which the trading opportunities were availed to us, where the setups were from the analysis that we did on the 16th, so we don't have to go through the same analysis again. But I'll put a link in the description so you can click it and go listen to the previous analysis that we did. But I'll just do a small touch of it here and there just for our proper understanding of the setups that are availed to us based on the analysis that we did then. Now, looking at this daily time frame, price was right here, and we had said that price had touched and rejected this area of support after breaking out impulsively above it, then retracing to retest it. We saw a bullish close with this candle right here, and so we expected another move to the upside to complete what we know as the impulse correction and impulsive formations in the market. And so we said that using our Fibonacci tool right here and measuring this retracement that had been done in the market, we expected price to push to the upside to come and test this 27 Fibonacci extension area and potentially the minus 1.27 Fibonacci extension level. And so we want to see how it actually played out. For those that do trade a swing trading style, there was an opportunity in the 4 hour, and so that's why I'm going to drop, and then I show you how you would actually have traded the setup that was availed to us. A very clean setup, a very clear tradable opportunity for you to make money in the market like I did past week, and I hope you made some money on gold like I did. And now this is the 4 hour time frame, and now taking our Fibonacci tool and measuring from the low of the previous impulsive move to the upside to the high of it, and this was the low. So now measuring it to the high of the impulsive move to the upside, which is this being the low and this being the high, with this being the low of the impulsive move and this being the high of the impulsive move, we see that price was touching. If I could extend this to the right, we see that price during the retracement phase of the market touched and rejected an area between the 50% and the 38.2 Fibonacci retracement levels. And now the fact that it was touching the Fibonacci retracement level, we wanted a bounce off to the upside, which we actually had with this candle right here closing bullish to the upside after bouncing off or touching, retesting and being rejected by the Fibonacci retracement level. We had a bullish close away from it, which indicated to us that now the bullish momentum after the retracement phase was beginning to come in, and so we expected volume to drive price to the upside to complete the next impulsive phase in the market for the completion of the formation of what I've told you to be the impulse correction and impulsive formation in the market. And so now, if I could just remove this. So now, the trouble that we had was the fact that price had formed this resistance area above here, and also the fact that price, while retracing to the downside, had broken and closed below this minor support area. And so now what we wanted was price to be able to break not only above this resistance area, but also this resistance area that had been support before, but now turned resistance as price was coming now to retest it from the downside. We didn't know whether it would hold or it would allow price to break above it. And so we wanted a break above it with price closing properly above this resistance area. So that's what we want to see in the market before we can execute our trade as far as our bullish bias is concerned. And so playing this out, see if we would get a close above these two resistance areas right there. Price was able to break and close above the two resistance levels, and so there was no option left for us but to execute on our trades according to the bias that we had in the market, see out the formation of the next impulsive leg in the market to complete the impulse correction and impulsive formation in the market. And so how would you have traded this opportunity that was laid before you? The way you would have was taking an entry at the break of the high of the candle that broke and closed above the resistance area, then putting your stop loss at the low of the swing from where this break originated, which is right here. As you can see, there's a push to the upside, then a small retracement, and then a break above this resistance area. Now, that small retracement created a small swing low, and that's where you place your stop loss. And the target is 3 times as much as you would have risked. That means that for every dollar that you're risking, you're targeting $3. For every $100 that you're risking, you're targeting $300. For every $500 you're risking, you're targeting $1,500. For every $1,000 that you're risking, you're targeting $3,000. Take it to the multiples of 3 versus the amount that you have actually risked on any particular trade as far as this trading strategy is concerned when it comes to trading, swing trading opportunities. And so this is the amount of risk that we have had in the market, and we are targeting 3 times as much. If you look at this tool here that has been provided to us by TradingView, you will see that there's a figure right here that reads risk reward ratio, which is 3 times. That means this pink area is the amount of risk that we are taking, and this bluish greenish area is the amount of reward that we are targeting from the risk that we have taken. And so if maybe I could mark it out, this right here and this right here, and so this is the reward and this is the risk that we have taken. And so playing this out to see how it went, and you see right here, price hadn't quite touched it, but this is the importance of psychology when it comes to trading the market. Psychology is a very, very important factor. You eliminate all elements of greed, you eliminate all elements of fear when it comes to trading as far as psychology is concerned. You know, nowhere is it much more truer as regards the importance of psychology as it is with trading the markets. It should be contributing close to 70 to 80% of your trading success. And the way you build psychology, which is actually a mental edge over the markets, is through practice. You've been there several times in your practice sessions that you do not care what happens of the market. Where you set your risk is where you leave your risk. Where you set your target is where you leave your target. The only thing that you could do is maybe to manage your winning positions or manage your risk as well, which we've already done here. Now, there's no problem with you taking profits along the way before price reaches your ultimate take profit, but it depends on what kind of strategy that you're trading, and this is just one specific strategy that I'm talking about, that I'm showing you right here, where you just leave your trade open to either hit your take profit or hit your stop loss, but you let your trades play out as you have analyzed and set out. And now we will play this out to see how it actually went. Right there. So the TP was hit when price touched this level right here for a profit of 3 times as much as we had risked. So that was the trade setup that played out following the analysis that we did on the 16th of August, and that is how it played out. I hope you took that trade. If you didn't, I hope you have now taken a lesson or two from the strategy that I've explained here, and maybe the next time the opportunity shows up like the one that we had that time, you'll be able to take advantage of it, use the strategy that I've revealed right here, and take that trade, and hopefully you make some money out of the market. Now, if you're new to the channel, kindly subscribe, like and share this video, and also turn on the notification so you're alerted every time I post new content on the channel. Thanks for watching.